In just 5 days, I will be requesting another $5,000 payout, which will take my total FTMO payouts to over $40,000 in just the last 6 months. In this video, I will be showing you my secret risk management strategy that prop firms don't want you to know. For those of you that don't know me, my name is Bani. I've been trading for over 5 years. And in the last few years, I managed to make over $250,000 trading with different prop firms. I was once in your shoes, also struggling with prop firms. It's a very difficult game. But if you master risk management and you think about it very deeply, you can turn this into a profitable career. In just the last 6 months, I did over $100,000 with just prop firm trading, and here are some of the payouts. So before I show you my risk management strategy, I want to give you a little bit of detail on what the model is. Everyone, no matter what model you're trading, you need to start with a plan. This I call my weekly outlook. Every Sunday or Monday evening, I do a weekly plan. This means that on the day that I actually take the trade, I was planning it days in advance. So I don't just wake up in the morning and think, let me just set a trade, let me just roll out of bed and take a trade. I already knew what I was doing. This gives me a lot more conviction and confidence in my setup. A lot of people ask questions about intuition. I feel like intuition is something that is built over time. You need to get really used to planning and planning and planning and planning over and over and over again. You don't just wake up one day and have all the tools ready to succeed. But I believe that because I kept replanning and doing outlooks every single week, this is what actually built my confidence as a trader. Trade planning is very important, as we discussed. So this is exactly how I plan my trades. It always starts with the weekly outlook, as I mentioned. This is how I do it, and a few days before I actually took this trade, I went over a breakdown on what I plan to do. Now, this gives me a lot of confidence because on the day of the trade, I was not panicking or scrambling. I seen Euro make all the confirmations that I'd planned previously. That's when I executed. So this next clip that you're about to see is the exact trade plan that I use, and with or without the community, I would always be doing this trade plan because this is actually the model that I trade. It always starts with the plan, and without the plan, there is no trade.
Make a high of the day, and then if we start on higher time frame, hourly or something, start closing above this high, it could be like a good swing target to go for higher price. Maybe DXY feels a bit harder to know where to target because this is throwing us off. You could all either go on capital.com or you could just look at EU and say, well, if EU did the same thing, we start breaking down and we execute, let's say we were to wait for that to happen, everything is going well, decide to execute over here, then good targets is like here. Very easy.
So that clip was a few days before the actual trade, and as you could see in the clip, we were showing that we wanted Euro to give us a little bit of a higher price or retracement, and then we want to see confirmation towards the downside. Then we can target this low and this low. That's the main basics of the whole model. You need the higher time frame plan. And the reason obviously I'm planning this is because over here, as you can see, we take out buy side liquidity, we make a big displacement on price. We then fail to make another swing high, which shows that Euro's weak. We also go to Euro GBP. This is one of the biggest parts of my whole model. Euro GBP shows the strength for Euro against the pound. So if we know Euro and the pound, what one's weaker, what one's strong, then we use that with the bias that we have on the DXY. So as you could see, this week, Euro GBP or last week had been very, very bearish, whereas this week we could see that if you go and see what price is actually done, it's been trading towards the upside. So always use Euro GBP. It's going to be a very, very good indication of what pair to short or long. So as I said, every trade is planned in advance, and all we want to see is if this move happens. What do we do if it doesn't happen? Well, then there is no trade, and that's the really, really good thing about trade planning, because if it doesn't happen, you've saved yourself a loss. But if it actually does happen, then you can execute, and if you execute and you took a loss, you actually have the confidence and you know that you were following the plan because it's not just some random decision that you made. So at this point, because there is nothing and I'm waiting for this to happen, I just have to sit on the side and wait till Euro actually makes the move that I want. So as you can see, if we play price, you'll see that the next day we actually start trading higher on the Euro. Exactly what we wanted. And you'll see that if you go to the last clip again, it was exactly the retracement that we wanted. So this builds my confidence, and I see these things. I'm looking at the displacement exactly how I planned before, and I could say, okay, cool. Now this is when I want to get into the trade. So higher time frame is very important because now when I go into the hourly, because I have such a solid indication of where the 4 hour, the daily is going, I actually have the confidence to let this one play. So back on the hourly now, as you can see, that was the higher time frame plan. So if we look at what's actually going on the hourly, this is what builds my confidence to actually execute. So we traded into the 4-hour retracement that we wanted, and this is the hourly time frame. This is the London session starting, and we're still climbing a little bit higher on euro. Over here, 11 a.m. and then 12 p.m. we start displacing lower. This is where I have confidence. Okay, everything that I wanted to start to happen, let me execute. And a lot of the time, I will just market execute based off of the displacement. A lot of people will look at this, beginner traders, they'll always say you have to limit. But the market entry was not just a random market entry, it was based off of the original plan. I'm seeing displacement based off of the higher time frame plan that I had previously. So now I decide I'm going to execute on euro. And what I ended up doing was 2 different entries. I think I might have entered a little bit earlier. You'll see the exact figures shortly. And I didn't want a tiny stop loss like this. This is only 13.7 pips. For me, for a higher time frame model, especially on euro and GU, you don't want a 13 pip stop loss because it doesn't make sense. So what I did was I decided I want to cover the whole invalidation, and I've moved my stop loss around 25, 26 pips higher, and I'm targeting these lows down here. That's my first target. So this itself is a good trade, but you'll wonder, how did I use the risk management strategy in a different way that everyone else does? So I decided that this should be my high of the day. However, with my higher time frame plan and rules, I don't want to have such a small stop loss. I do believe that there's a good chance that we don't go above this high. So I don't do something silly and just put all my eggs in the first trade and hope basically that we don't take out this high. So what I do instead was I took 2 entries. I took 1% over here like this, and I risked a very, very small amount with a smaller stop loss over here. So now, if this actually is high of the day and I'm right about that, then I have a trade that's going to make me double the profit, but with a very, very small stop loss and with less risk. So on the first trade, as you'll see, I'm risking $2,000 on this first trade with the larger stop loss with breathing room. On this second one with a smaller stop loss, I'm only risking $600, but it was the same lot size as the first position, which means that if they both hit take profit, I make double the money. So instead of making only $4,000 to $4,500 on this trade, I was able to make $9,000 on one of my FTMO accounts. And that is because if the risk of me getting wicked out over here was to happen, I would only lose $600 and I would still be in the first position. If I was to lose both of them, I would only lose $2,600, which is less than 1.5% risk on a 200k account anyway. So you don't go into it guessing and being afraid. You just split the risk into something that is able to manage, because as I said, worst case scenario, I lose less than 1.5%. Best case scenario, I'm making over $8,000 to $9,000 on the trade. And that's exactly what happened. So I didn't go into this scared because I knew, okay, the first one doesn't go well, I'm only losing $600, but it's worth it because of the risk and reward. So here you go. We'll see what actually happens on the trade. We play, displacement happens, we go all the way down to the lows. It was a smooth trade. A lot of trades aren't like this. And as you can see, we hit the full take profit target. And because I was able to hold the whole amount towards the full draw, I made $9,000 on my FTMO account. Now, the reason that this is so special in particular is because my last 2 trades before this were both losers. Now, the reason that this risk management strategy was so special is because I was actually down 2% on my FTMO account prior to taking this trade. I was down $4,000. After this trade, because of the way that I scaled in my risk without adding too much, I was actually able to make $9,000, which takes me to a $5,000 profit split in just 5 days. So this is my FTMO dashboard. As you can see, I'm up $4,800 and I can request this profit split in around 5 days. If you want to see when this profit split actually lands, make sure to go to my Instagram because I post all of my profit splits. So what made this strategy so profitable is because if I was to just take the one position, I would have only made, as I said, $4,000 to $5,000. Because I scaled in a very, very small amount, it did not over leverage my account, although it added a small amount of risk and that doubled the trade's profit. That is the only reason why I'm able to request this payout instead of having to wait maybe another 2 weeks to crawl the account out of drawdown. You need to think about it outside of the box. Prop firms, they're designed for you to lose. You need to think about the way that you leverage these accounts. You don't have to full port your accounts and risk 4%. I only risked, as I said, less than 1.5%. It's just the way that you do it. I hope you took away something valuable from this video. If you're new to the channel, make sure to subscribe and hit that like button. Make sure to comment below what you'd like to see next, and make sure to go to my Instagram if you want to see all of my profit splits, including the one mentioned in this video.